Regarded as East Africa's biggest economy, Kenya is aiming to tap into the global capital market to get the funding it desperately needs to bridge its budget deficit. The government is currently running a deficit of over 169 billion shillings. Treasury intends to issue a sovereign bond to the tune of $1 billion, an equivalent of 85 billion shillings, to enable it to fund infrastructure projects in the country.
We want to use this money for infrastructure because we have also seen when you improve infrastructure, it also creates jobs.
The proceeds will also be used to repay a syndicated loan of $600 million borrowed from a syndicate of international commercial banks late last year. Market observers have expressed optimism over the timing of the move, saying the political anxiety brought about by the election period is slowly cooling down.
I think they're taking advantage of the reduced political risk. It's been substantially reduced, and that's that issue about the court, the processes that we have now compared to 2007 and previously.
However, analysts at Zimele Asset Management say the government needs to consider two measures before issuing the bond. One, increasing of domestic saving, and two, take measures to reduce the current account deficit.
There is a shortage of African sovereign bonds in the global marketplace right now. The last sovereign bond that was issued was Zambia. It was 15 times oversubscribed. Angola is going to issue a bond this year as well. The appetite for sovereign paper, African sovereign paper, has never been as high as it is today in the international markets.
Kenya's economy is showing signs of stabilizing, and the government's decision to issue a sovereign bond will indeed reflect optimism over the country's long-term economic position. Dennis Otieno, Citizen Business.